The president said, if some in the Chinese government want to slow down the global economy through disappointing actions and through economic coercion, the Chinese economy will be hurt the most.
China's Treasury holdings reportedly fell by $2.8 billion in May, but well, the numbers are a bit higher than previously thought.
For the fifth month in a row, they've been selling bonds. $16.4 billion is what they sold in August. Danny, that's now the lowest holding of Treasuries since 2009.
Belgium, a country with only 11 million people, holds about as much U.S. debt as all of Canada. In 2024, Belgium held $374.6 billion in U.S. Treasury bonds. That is a 28% increase from the $293 billion at the start of 2024. And it's even higher right now. That is approximately $32,000 in US government bonds for every man, woman, and child in Belgium. Here's the thing. The Federal Reserve knows it's not Belgium buying. They've written papers about it. They know who it probably is, but they can't prove it. And the real buyer, we'll let you figure out who that is. They're laughing all the way to the bank. While everyone watches China's official holdings decline and thinks, oh look, China's dumping US debt, the truth might be the exact opposite. Today, I'm going to show you one of the greatest shell games in modern finance and why it means the economic war between the US and China might be a lot more complicated than anyone is telling you. Stay with me to the end to find out why. My name is Elizabeth Ann Stewart, and you are watching Geopolitics and Money. Follow the money, decode the world. And a big thank you to today's show sponsor, Gold Mining Inc. Now let's dive in. The Belgian anomaly. Let's start with the basics. When foreign governments want to buy US Treasury bonds, and they do because despite everything, it is still the safest, most liquid investment on planet Earth. Even though it's declining, it still is. Those purchases show up in data published by the US Treasury Department. It's all public. You can go look it up right now. And for decades, the pattern was predictable. Japan was number one. They've got massive trade surpluses and needed somewhere to park those dollars. China was number two for the same reason. Then you'd see UK, then a bunch of other major economies. But starting in 2011, something weird started happening in Belgium. Belgium's holding of US Treasuries started surging. Not gradually, we're talking about massive sporadic jumps. In 2011, their holdings jumped. Then in 2013 and in 2014, they surged again. By December in 2024, Belgium held $374.6 billion in US debt. And during 2024 alone, their holdings increased by 28%. Now, Belgium is a lovely country. Great chocolate, excellent fries. Yes, Ghent was wonderful. The center of the European Union. But Belgium's entire GDP is about $665 billion. Which means they supposedly hold US debt equal to about 56% of their entire economy. Oh, and their government wasn't solid for a 541-day period. That was from 2010 to 2011, when Belgium literally couldn't form a government after an election. Political deadlock, no elected government. And during that time, Belgium's US Treasury holdings started their mysterious surge. So let me get this straight. A country that can't even agree on who's running it is somehow making massive, sophisticated plays in the US Treasury market? The Federal Reserve economists who track this stuff, they're not buying it either. Here's where it gets interesting. Belgium isn't just some random European country. Belgium is home to something called Euroclear. And if you've never heard of Euroclear, don't worry, they like it that way. Euroclear is what's called a central securities depository. Think of it as a massive, ultra-secure vault where governments, companies, and wealthy individuals from around the world park their financial assets. We're not talking about millions here. As of December 2024, and listen up, Euroclear held 40.7 trillion euros in assets under their custody. That's over 40 trillion with a T. When you're a foreign government or a massive financial institution and you want to buy US Treasury bonds, but maybe don't want your name showing up directly in the data, well, you're in luck. You can use a custodian. And Euroclear in Belgium is one of the biggest custodians in the world. Here's how the US Treasury data works. When they report foreign holdings, they attribute those bonds to wherever they're physically held in custody, not necessarily who actually owns them. So if China buys US Treasuries through Euroclear in Belgium, those bonds show up as Belgian holdings in the official data. The Federal Reserve caught on to this years ago. In a 2014 paper, Fed economist Carol Bertau and Ruth Judson wrote about Belgium's sporadic sizable increases and connected them to what they call custodial shifts. A more recent 2023 Fed paper explicitly stated, Euroclear, a major global securities custodian, is based in Belgium. So holdings of US securities attributed to Belgium often belong to residents of other foreign countries who custody these securities with Euroclear. They stopped just short of directly naming China, but they noted that around the same time Belgium's holdings were surging, there were gaps between China's recorded treasury holdings and what should have been there based on China's massive trade surpluses and foreign exchange reserves. The math wasn't mathing, unless China was buying through Belgium. Now you're probably asking, why would China bother with this shell game? It's a great question, because on the surface it seems pointless. The US Treasury is going to get its money either way. China still has the same exposure to US debt, so why the charade? There are three reasons, and they're all about leverage and perception. The first is political theater. It's called theater for a reason. And every single country plays into the theater. When you hear headlines about China reducing its US Treasury holdings and China's official holdings dropping from $779.7 billion in January of 2024 to $759 billion in December of 2024, what's the implied threat? It's basically China saying, hey, America, we're pulling our money out. We're losing confidence in you. That's the message. That's economic saber rattling. It makes US policymakers nervous. It makes markets wonder if foreign demand for US debt is weakening. But if China's actually maintaining its exposure through Belgium, Luxembourg, and other financial centers, then the whole thing is a theater. They get to make the political statement without taking the financial hit. Second, avoiding scrutiny. When tensions rise between the US and China, and unfortunately, we want peace here, have they risen? That's, of course, something we here on the channel would like to see turn into peace and cooperative interaction. I hope that happens. There's always talk in Washington about potential sanctions, asset freezes, or other ways the US could weaponize the dollar. We saw what happened to Russia in 2022 when the US essentially locked them out of the dollar system after Ukraine. By spreading their holdings across multiple custodians in different countries, China makes it much harder for the US to get a clear picture of their total exposure. And that makes those holdings harder to target if things really do go sideways. Third, market impact control. If China wants to actually reduce its US Treasury holdings, and there are legitimate reasons they might, like diversifying into gold, which they're doing, or other currencies, they can do it gradually through multiple channels without spooking the market. A massive publicized sell-off by China would send Treasury yields spiking, the dollar tumbling, and create exactly the kind of financial chaos that would hurt China's remaining holdings. But if they're selling through proxies, they can be much more strategic. The bigger picture. Here's what makes this story bigger than just Belgium and China. Look at the full list of the top US debt holders as of December 2024. These numbers have changed a little bit this year, but we don't have official reports on them, so I'm keeping the 2024 numbers. Japan was number one with this is insane, $1 trillion, basically. The UK had 722.8 billion. China officially has 759 billion. And now listen to these. Luxembourg, 423.9 billion. Come on. Cayman Islands, 423 billion. Canada, 378.8 billion. Belgium, 374.6 billion. Notice something? The Cayman Islands, population of approximately 70,000 people, supposedly holds more US debt than Canada? That's nearly $6 million in US Treasuries per resident of the Caymans. Luxembourg, population of 650,000, is the fourth largest foreign holder of US debt with $423.9 billion. These aren't countries investing their trade surpluses. These are financial centers, hedge funds, sovereign wealth funds, and yes, probably Chinese state entities using shell companies and custodial accounts, which is a very normal thing to happen around the world. When you add up the likely Chinese holdings hidden through Belgium, Luxembourg, and other financial centers, China's real exposure to US debt could actually be hundreds of billions higher than the official $759 billion figure from 2024. Some analysts estimate that if you account for these custodial holdings, China might still be holding close to $1 trillion in treasuries, not far below where they were at their peak of 1.3 trillion in November of 2013. And here's the kicker. The Federal Reserve knows. They've written about it. But because of how the international financial system works, with custodial accounts and layers of corporate structures, they can't definitively prove how much of Belgium or Luxembourg's or the Cayman Islands holdings belong to China. It's not illegal. It's not even unusual for large institutions to use custodians. But it does mean that when you read headlines about China reducing its US debt holdings, you should take them with a massive grain of salt. What it means for America, and why this even matters. Why should you care about China playing hide and seek with its treasury holdings through Belgium? Because it shows you how the real economic war is being fought. And it's nothing like what you see in the headlines. On the surface, we see tariffs, trade wars, and presidential truth social tweets about China dumping US debt. But underneath, China may be carefully, methodically maintaining its position in the US financial system while appearing to distance itself. It's the financial equivalent of saying, I'm leaving, while keeping a key to the house. And the implications are huge. For US policy, Washington thinks it has leverage because China officially holds less US debt. But if China's real holdings are much higher and hidden, that changes the calculation on tariffs, sanctions, and financial warfare. For the US dollar, all the talk about de-dollarization and the dollar losing its reserve status, well, if China is still parking hundreds of billions in US treasuries through back channels, they clearly don't believe fully dumping the US dollar is a good idea. And for you, when someone tells you China is dumping US debt and that's why we need to worry, ask them, are they though? Or are they just moving it around so it's harder to track? The Belgium trick isn't just about one country's mysterious treasury holdings. It's a window into how the global financial system actually works. It's smoke and mirrors, custodial shifts, shadow banking systems that make the official numbers almost meaningless. Belgium isn't buying $374.6 billion in U.S. Treasuries because they believe in American economic might. Euroclear is facilitating someone else's purchases, probably multiple someone else's, who have very good reasons to keep their names out of the headlines. And the next time you hear that China is reducing its U.S. debt holdings, remember Belgium, remember Luxembourg, and remember the Cayman Islands. Because in global finance, nothing is ever quite what it seems. The real game is always being played 3 moves ahead through shell companies, custodial accounts, and tiny European countries with massive unexplained piles of US Treasury bonds. That brings me to our show's sponsor for today, Gold Mining Inc., stock ticker GLDG. With gold hitting north of $4,200 an ounce recently, a record price that is accompanied by record silver prices of $53 an ounce, the gold mining sector has been appreciating in 2025. Van Eck, Ruffer, Goldman Sachs, and Sprott have a position in this New York Stock Exchange American listed company. Today's sponsor is a New York Stock Exchange American listed company. And as I said, what you're about to see is special because Gold Mining Inc., stock ticker GLDG, is a gold exploration company with over 10 different projects in the Americas, but it also owns a large position of publicly listed gold companies, giving exposure to additional catalysts and leverage to the gold prices at the same time. Gold Mining Inc.'s market cap is roughly around $332 million as of October of this year. Yet, its portfolio of equity holdings includes cash positions are about worth $236 million alone, based on October 14th closing prices and cash balances at August 31st of 2025. That's before giving any value whatsoever to its portfolio of exploration stage gold-focused projects across the Americas and any additional potential value and optionality from its uranium projects located in one of the world's highest grade districts, Athabasca Basin in Canada. On top of that, the company has no debt. Let's do the math together because, as I said, the market cap of Gold Mining Inc., ticker GLDG on the New York Stock Exchange, was $332 million as of October 14, 2025, of which appreciated over 100% in 2025 so far. Based on its most recent MD&A as of August 31st, 2025, and closing prices of underlying securities as of October 14, 2025, all these stock values are based on the closing prices of October 14th, 2025. Gold Mining Inc. has positions in these 4 companies, 2 of which nearly tripled in 2025 so far. Above that, Gold Mining owns one of the largest gold and gold copper resource stage mineral portfolios in the Americas. We're talking over 10 projects located in pro-mining jurisdictions in Canada, the U.S., Brazil, Colombia, and Peru, with an estimated 12.4 million ounces of estimated gold equivalent in the measured and indicated category, and an additional 9.1 million ounces of estimated gold equivalent in the inferred category. Gold Mining Inc. has announced plans to advance 4 key projects. The highlight is the São Jorge project in Brazil. The company commenced its largest ever exploration program in May of 2025. This is a project with approximately 1 gram per ton open pit resource with regional growth potential on a 46,000 hectare, approximately 115,000 acre land package. Targeting resource growth is important given the industry-wide challenge of reserve replacement as major producers deplete reserves rapidly. The gold mining portfolio includes increasingly scarce large-scale gold and copper projects in mining-friendly jurisdictions. If these projects are progressed successfully, they are just what the major operators will need to replenish reserves mined through production. These are projects in safe jurisdictions with infrastructure advantages and a management team with deep experience in building value over time. Gold mining's leadership includes mining veterans, including former Goldcorp CEO David Garofalo and serial entrepreneur Amir Adnani, who serve as co-chairman. Insiders own over 10 million shares, showing strong alignment with shareholders. If you want exposure to gold through a company with exposure to gold price, a pipeline of developmental projects, and interesting institutional and insider backing, Gold Mining Inc., New York Stock Exchange GLDG, deserves a closer look. As always, make sure you review Gold Mining's public filings for important information regarding it and its projects, including its most recent annual information forms and technical reports referenced in them. These are all available at www.cedarplus.ca. There are always risks in investment, and there are no guarantees of any kind. Always do your own research. Bye for now.